Hi everyone, Fatima here from Keller Williams Real Estate Associates. I have Andre Persaud from Safebridge Financial here with me, and I posed a question to Andre. Him being in the mortgage world, he has insider information, and he sees the trends on what's going on in the mortgage world right now. So we've been 2 months now into the COVID crisis, Andre. What could you tell us that, in your opinion, what's happening in terms of the rates, and what do you see happening in the mortgage world in the coming months right now?
Okay, so obviously we're in a time like no other, you know, across the board with every industry, mortgage world included. I've been in the mortgage industry, or the financial industry, for over 10 years now, and I've never seen anything like this. So a lot of the narrative in the media over the last, I'd say, 2 months has been, the Bank of Canada is lowering rates. The Bank of Canada is lowering rates. And historically speaking, when we see that happen, we would see the banks, lower their rates accordingly. But we saw something strange, maybe 2-3 weeks ago, where the Bank of Canada lowered their rates, and the banks actually increased their rates. And I was baffled. I woke up Monday morning, I saw that was that's what happened, and I made a call into one of the guys at Scotiabank, and I said, what's going on? Why did you guys increase your rates? And the answer was that the banks were worried. So we saw rates actually go up, were much higher than where they historically should be. And the reason that they gave me was the banks were worried. So they were worried on a few different aspects. One was they were worried about potential defaults in mortgages, right? If people are losing their jobs or getting cut back on their hours, are they going to be able to pay their mortgage?
Yep.
So they were worried about the risk factor on their part from that standpoint. But they were also worried about what they said was liquidity. So I'll try to put this kind of in layman's terms a little bit here. If people are getting, losing their jobs or getting cut back on employment, or the income is going down, they might have to draw on credit. But what we have to all realize is when you draw on credit, you swipe that credit card or use that line of credit, money has to fly out of a vault somewhere, right? Cash has to fly out of a vault to pay for that transaction. So the banks were thinking that they're going to see a lot of cash flying out of the vault. But I mean, then you couple that with people deferring their mortgage payments, there's less money coming into the vault. So, they increased rates to kind of increase some of those profits to try and make up for some of those risks. Now, what we've seen over the past, I'd say, week to 10 days, is we have started to see rates start to fall again. And I think it's really the banks are just starting to figure it out and wrap their minds around what the expectations are. Again, things have been changing so rapidly, and I think people deferring their mortgage payments can take some of that default risk off of the bank's plate. So we have started to see rates fall again. So to give you some rough numbers, a month ago, rates, let's say 5-year fixed rates, are in the mid twos, maybe 2.7 roughly. And we saw them slide into the low threes, and now we've seen them come back to where they were a month ago, mid twos, 2.7 roughly, in that neighborhood, depending on the down payment that you're making. And I do expect rates to continue to fall. Rates are based, fixed rates are based off of bond yields, and historically speaking, the fixed rates were roughly in the neighborhood of 1.5% above where the bond yields were. So that would dictate that fixed rates should be right around 2% right now. However, they're in the mid to higher twos, just to build in that buffer during this whole COVID era here that we're going through. So I do expect rates to continue to fall, but I have nothing in my career to base it, or I have nothing to base a pandemic off of. Right?
Yeah, there's no precedence for us.
Yeah. So you know what I mean. I don't want to say your guess is as good as mine, but we're trying to analyze it, and we're seeing things we haven't seen before, where rates are going. So it is hard to predict. But if I were to make an educated guess at it, kind of basing it off of what maybe is a closer comparison is the 08-09 financial crash. I do think rates should go down and stay down for the foreseeable future.
Right. Well, thank you so much, Andrew, for your input. Definitely, it's encouraging to hear that now the banks have actually started, reducing their rates in line with the Bank of Canada. Because yes, I did see that they didn't for a while. So it's great to see that that's happening right now. If anybody has a question, definitely you are able to get in touch with Andre directly. I'd be happy to facilitate that if you have any questions with regards to mortgages. In the meantime, we will continue having another conversation with Andre. I think that would be very interesting one, especially for first-time home buyers. Thank you so much, Andre. And until next time, keep safe. Take care. Bye for now.